Now, I've talked a lot about not letting the bank decide how much you can afford, but how do you know the best monthly mortgage payment that works for you? This is the number one question I get asked on almost a daily basis. I'm Kelly with Pro Home Buying, and I help people get their finances in order before they buy a house. And did you know the bank could potentially qualify you for more house than you can actually afford each month? And this is because of your personal monthly spending. And the bank's just going to be looking at your monthly debt payments. And therefore, the biggest key to a successful financial future is buying a house you know you can afford. So when we talk about affording a home, we need to look at first how much it costs on a monthly basis to own a home. So there's a lot of expenses that you might not even know about. They are principal and interest, and that's the typical mortgage payment that you're looking at. And that's the repayment of the loan to actual bank. And then the mortgage insurance. If you put less than 20% down, you'll be required to use mortgage insurance, which protects against the bank against you defaulting on the loan. But there's also things like homeowners insurance, real estate taxes, association fees, HOA fees, meaning utilities, electricity, water, sewer, trash, anything like that. And then plus on top of that, maintenance, lawn care, anything else that you might think of. Now that you know your payment, let's talk about the amount of money you can personally afford to put towards your monthly mortgage payment each month. There are a few ways to do this, but I like to look at what you make each month and then take a look at your average monthly expenses. So I want to start off with your income, specifically the amount of money that gets put into your bank account each month. So we'll call this your net income. Then next up, we'll look at your expenses, and we want to review all of your expenses except for your housing expenses that you have each month. These can be debts, food, childcare, student loans, everything that you pay on a monthly, quarterly, or yearly basis that you want to make sure to include. And I think it's important to get an average of at least a few months of expenses to make sure you're including everything and getting a more realistic view of your expenses throughout the year. And after you reviewed your average expenses, go through each one line by line and ask yourself, is this accurate? Is there anything else I should be including? Are you putting enough away for like savings, 401k, emergency funds? Is there anything else that you might be able to eliminate quickly and to get your expenses down? And then put this all into a budget, and then we'll take a look at your income, less your projected monthly expenses in your budget. And again, this is before housing, and we'll use that remainder towards your new future housing payment. Remember, you need to stay safely under this amount for the total payment, and that includes a mortgage payment, insurance, taxes, utilities, like we talked about before. Every property is different, but I like to say an estimated about 30% of other monthly expenses that are not the mortgage payment. Then enter this amount into a loan calculator, and it'll tell you roughly the amount of the mortgage that you'll be able to get. Now we'll take a look at your down payment. If we look at the amount roughly that you can afford, we can add up the down payment on top of this loan amount, and it can show you how much the purchase price would be. The bank most times will require at least 3.5% down payment or higher for the purchase of the house you'll be living in. And also remember, the down payment and the closing costs are completely different. And a good rule of thumb is to budget between 2 and 3% of the purchase price on closing costs. And these can vary based on your area and the bank you're using. But the best person to discuss this with is a local mortgage person. So look at a bank, credit union, or other mortgage company who can give you a good faith estimate that outlines all the fees associated with closing on your new property. And make sure you shop around as it gets closer without them pulling your credit. Another good way to make sure you can afford a new mortgage payment is to look at how this compares to your current monthly housing payment. If it's a big difference, ask yourself, how easily am I making my current monthly payment? Is this a struggle each month, or am I financially comfortable with this? What can I spend less on that can help contribute whatever the difference is towards my monthly housing payment? And am I being realistic about my future spending and budgeting that still allows me to save as well as pay off some of my debt and pay down my expenses? Or do I need to readjust this? Do I feel comfortable with all of these numbers? Then try out the payment for a couple months. Put the difference from your current housing payment from the new mortgage payment into a savings account each month and see how this is working for you. Well, I really hope this has helped you decide how much you can afford. If you think this might help someone you know, please feel free to share it. Or if you have any questions, feel free to comment below, and have a great rest of your day. Talk to you later.